Let's kick things off. Let's get the show on the road.
Unfiltered 98, our currency is collapsing.
Privilege of welcoming one of our good friends into studio.
So not even Buffett listens to Buffett. Sue me, China, if you must. But
1 or 22 on AC, but you're not getting that at home.
And there's quite a bit to discuss.
the stock is cheap.
The last podcast I did.
Introduce me.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
And we're moving on to our deep dive. Folks, if you are joining us for our YouTube stream, just remember we have a live section that happens before this particular conversation that covers our market matters. If you're still with us from our audio podcast, thanks for sticking around. This week in the deep dive, I know we had mentioned that we were going to go into the Curo delisting, but we're going to change things up ever so slightly, and we're going to go look at the minimum wage conversations from the top 40 companies in South Africa. These companies have started to announce to the market and to the public what their minimum wage figures are going to be. We're going to be unpacking this and digging deeper into whether or not these numbers make sense. Very, very interesting conversation, very topical conversation if you think about just the spread in South Africa.
And poverty.
Right. South Africa has probably one of the highest, if not the highest in the world, discrepancies in income and distribution and wealth distribution. And the minimum wage conversation comes up ever so often in various forms, whether we're looking at it from a blue-collar perspective, whether we're looking at it from the difference between the top earners and the low earners and all of those other things. This is not a conversation that this is not a conversation that happens lightly. And companies are now reporting more and more what they are paying their lowest worker, and not lowest by qualification, but by pay.
So this is the new part of the Companies Act. So what they've got to do is we've known what directors earn forever. And I remember 25 years ago when that first started being proposed, and it was like, oh no, terrible. And you know what? Like, no one died. And anyway, so now you've got to give your lowest paid workers a pay scale. You've got to give your median, and in a proper company, this should now be part of the Remco conversation. Currently, Remco is how do we award all these people we sit around the table with at the board meetings and have lunch. Now they've got to sort of bring this into the equation as well. So we've only had 15 of top 40 companies report. And let's start with the top, because so the top, now I've lost the data.
While you find that data, Sai, Remco, for those out there that are a bit confused around how this all works, for publicly listed companies and mainly for bigger companies as well, as part of things like the Companies Act and the King Code, the Remco would be the remuneration committee. They sit, they debate and deliberate whether or not the remuneration within a company is fair according to company standards, according to what is out there in the market, and all sorts of other factors. And then they vote on that and approve that for the next payment cycle. So when Simon mentions the Remco having these sorts of conversations, typically in the past, the remuneration committee would sit and say, are we paying our directors fairly? Are we paying our CEO and our exco, executive committee, fairly based on what we think we can afford as a company? So now to expand this to not just be the executive and C-suite individuals, to include all of the employees within a company. It's a big move from the Companies Act of South Africa. It's a necessary move, and it's part of the conversation that we've had before. We've had a conversation on the show before around wages, around how much people are getting paid for certain things. We covered how much the CEOs of private schools were getting paid at some point as well. And so for us to look at this from a JSE perspective, quite interesting that this data is now publicly available.
Yeah, and at the AGM, you can vote on the remuneration report. Of course, it's advisory, and the company can ignore it. So top of pile is Remco, with minimum wage is 258,000 and change. That kind of makes sense, right? Because Remco is an investment group. They probably, they pay fairly well. Next in line is Investec at 250, so it's just over 20K. That's not bad. Impala Platinum at a minimum of 250. Now, you might remember those strikes of the platinum strikes for 10, 12 years ago when the workers wanted 12,500, the rock drillers and Investec said no. I wonder here, and I don't know, because, so I tell you what I'm wondering. SPAR, for example, has a minimum wage of 12,500 a month and is going to get that to 15,000 by the end of next year. I don't know what they're waiting for, but anyway. But of course, the trick is that is for SPAR. SPAR is not the stores we go to. So that's not cashiers and packers. That is head office and the like. So maybe Impala, the rock drillers don't work for Implats anymore. Maybe they work for a contractor.
Yes. So that's the other factor that we need to look at here is whilst these numbers might look a certain way, company sizes differ, right? So if you're going to compare something like an Investec to something like a ShopRite, there are definitely more ShopRites or ShopRite outlets and ShopRite workers.
Skills that you need to be a ShopRite person, no disrespect to an Investec. I mean, they're different. I fundamentally get
so
that.
that's the thing. So, right, size of workforce, size of company, and how many people the company employs, as well as their various qualifications. I mean, I take something like a Sasol that is a significant employer in the economy. You don't typically expect, when you're, it's simple mathematics, folks. If you've got 100 and you divide 100 by 10, it gives you 10. But the moment you divide 100 by 100, it gives you 1. So the more people you're dividing this by, the lower the average is going to be. Now, we're not saying that a lower average necessarily means then that these companies need to pay more. We're just trying to make sense of how much these companies are paying people. You bring up the Investec, the Impalas. I see Harmony as well is well up there, around the 230,000 Rand per annum, or around 19,000 Rand per month, in terms of how much they're paying on average for minimum wages. The spread is quite interesting because when you look at the companies themselves, certain companies, certain sectors will pay you more than other sectors. So, financial sectors,
always pay
mining,
more
when mining is doing well.
Well, they don't care whether they're doing well, they pay the wage. But certainly financial services. And then, I mean, retail is going to be one that doesn't. I mean, and to your earlier point, ShopRite has, according to Google, and it seems like a lot, 160,000 staff members.
That's a lot of employees.
It's a lot.
That's a lot of employees.
It's two F&Bs.
Yeah, there we go.
With some space left over for you and I to have an executive suite, but that's about all it is. So some sectors will just pay more. But just remember, minimum wage also, in theory, includes the cleaners, the receptionists.
Yes.
But of course, a lot of that has been outsourced these days. One of the Bidvests have got all of that, one of their divisions. A lot of that gets outsourced to third parties, so it's not on your records. So there's some discrepancies there. But I mean, let's cut to the chase and get to the ShopRite one, and they were bottom of the pile, and their minimum wage that they are paying is 5,972 a month before deductions. Now, that is above our national minimum wage, not by a heck of a lot, but it is above our national living
which
minimum
increased at the start of this financial year.
Yes.
Effective 1 March 2025, national minimum wage is set at 28 Rand 79 cents, an increase of about 4.4% from the previous financial year, right? So according to Stats SA, around 5.4 million workers in South Africa earn below minimum wage. Now, these 5 million workers can be across various sectors, industries, whatever. That's what Stats SA has measured. This brings up the other conversation around how much executive pay versus lowest pay and all of that, and the disparities that we're seeing there. And I remember you bring up the conversation, Sai, around the mining guys a couple of years ago looking at that. I remember a distinct conversation also a couple of years ago with Sibanye in particular. And there was a huge raging debate about how Neil Froneman could earn 300 plus million rands, whilst the lowest earner in Sibanye didn't earn a fraction of that, and all of those other conversations. And it comes back to the conversation we had when we spoke about things like executive pay, was we have to understand the other mechanics behind it, right? So nobody's saying that companies shouldn't be paying their lowest earners more. But if I remember correctly, the Sibanye case in particular, I reference it because it's what we're talking about. That case in particular, a huge percentage of the earnings that were classified as Neil Froneman's part of 300 million rands were share options
Correct.
that he took, the same share options that had been offered to employees at the same kind of structuring, and employees were advised by their unions to not take that. And that's another dynamic we need to understand. In that scenario, isolated example, where you have those options, it's important to see what upside looks like, what risk to that upside means, and make that decision. I think often we try to sort of look at this conversation and try to pin it on, executive only get paid and then they don't care about the lower blue collar worker. It's not that they don't care. It's that perhaps each company
they do, but don't
No,
care.
very well. Sometimes it is very much that they don't care. Yeah. Sometimes it is to look at the fact that each company structures these remuneration agreements differently. That being said, nobody's saying that we shouldn't be paying the blue collar workers. At the end of the day, there's a very real argument that can be made for the fact that it is because of the blue-collar workers that you're able to achieve your targets, that you're able to achieve the outperformance that you achieve in any financial year. And therefore, you should be rewarding them and compensating them fairly for that.
Yeah. And the unions hate options because they cut both ways, right? So Froneman made all that money because PGMs went to the moon, and if they hadn't, Froneman wouldn't have, but neither would have the staff. And the unions are always going to say, take
the certainty.
Money. Now, I've always had a theory that says the unions should negotiate for, 10% of EBITDA profit to be paid to staff. And if there isn't, there isn't. And if there is, there is. Trick is what when there's a loss, etc., etc. But I want to get back to ShopRite. So they are above the minimum wage. That we 100%. But the Living Wage SA Network in 2022 put out data that said the amount of money you need to live, and there's an important phrase out there, with dignity, is around 12,500 to 15,000. And that data is
per
3
month.
years old. Per month.
Okay.
That data is 3 years old. So let's call it 150 to 200 to 180,000. ShopRite's paying 71. They're not within a million miles of that. Can you live on 5,972 a month? You can. Do you live with dignity? No. I mean, that's not a debate. There's just, like, yes, you're subsisting, you're alive, but there's no dignity there. And remember that poor people or lower income folks, their two biggest hits are transport and
to get to the job that pays them.
Correct, Amanda. And because of apartheid spatial planning, you're not living around the corner. You're taking taxis, sometimes multiple taxis.
At 4 o'clock in the morning. Yes.
And there's lots of research that comes out that always talks around productivity in South Africa, and we have very bad productivity. And the reason for that is quite simple, because if you're working in your day job at a fancy Rosebank Mall or something, but your shack is Alexander and it is raining and you're worried about it being flooded, you're not. How are you productive when you're not even earning?
Put productivity to the side for a second, Si, because I want to look at something else. The average. Well, this is as of May of this year. Now, these numbers would have obviously been affected by inflation and all of those adjustments, right? The average cost of a food basket in South Africa, guess where that sits right now? Now, we're not talking fancy things. We're not talking pesto inside pasta.
What is this per month per person?
This is the average food basket in South Africa. It's a basket of food, so the basics that would be in there, the maize meals, the rice, all of the staples and all of that, right? Your average cost for that food basket as of May-ish of this year, a couple of months ago, just under 5,500 rand a month. So food.
This gets awkward quite quick.
Right? We haven't factored in rent, utilities, transport, as you mentioned, school fees, all of the other things that go into these numbers. Food alone, on average, for basic food, 5,500 rand. Folks, while we're on that topic,
and you get that data, PMB, there's a PMB household valuation index that they do out of Pietermaritzburg, which gives that data. They go, and it's...
I've spoken to those guys before. They go into that every single month.
They do epic work.
They do really good work on that. Folks, while we're having that conversation, give us your thoughts around that. Give us your thoughts around the average expenditure that you are earning versus the average wage you're earning. We know this is going to go out to almost everybody in the country, you're going to find very few people that are saying, I'm living comfortably from a month-to-month basis. And we're dipping into savings, we're dipping into credit cards, we're dipping into all of these other things to just sustain our livelihoods. And I suppose the question then becomes is, if we increase the minimum wage rate in South Africa, what does that then do for the population? Because every year, these JSE companies that we're looking at are also able to report record growth, record numbers. We've been seeing a lot of that happen. Now, yes, as you rightly mentioned, Sai, this is not going to happen every financial year. And as a management team, as a leadership team, it's your responsibility to plan for the years where it doesn't happen, right? So it's all good and well to look at it in a record year and say, hey, you guys should be paying more. Should we have that? Should we have a variable compensation structure that says in years of outperformance, we will then allocate X amount more towards compensation?
No, because A, you can fudge profit, although it's harder to do if you're listed because shareholders want their cut. But the biggest story is you don't want to not be able to pay workers. It's really quite simple. So the first part is some people are going to say, but company can't survive with a minimum wage. Well, if your business doesn't operate and make money with paying minimum wage, you don't have a business. Really? You don't. But also, let's say Shoprite tomorrow came out and said to their 163,000 workers, to be clear, they're not all in the minimum wage, but let's say minimum wage is now going to be 15,000. They're getting an extra 9,000. What are they going to do with that 9,000? They're going to spend it. Where are they going to spend it? Shoprite and Mr. Price, etc., etc. So if we instead said, you know what, our current minimum wage is whatever, 5,000 and change, and over the next 10 years we want to drive it to 15,000, and there's going to be some short-term pain. Guess what? Treasury gets taxed. I mean, but it comes back in. It gets spent. I remember when we started going big on grants in the early 2000s, and people were like, how do we as investors benefit this? It's like easiest thing in the world. Buy Shoprite and buy Mr. Price, buy clicks, because that money's going to get spent. It's not going to get saved. Some of it will, but most of it not. And would that put a dent in Shoprite's profits? Maybe, but you know what? We'd have a better country. We'd have less poverty. It would all round just be, if you think that most households only have one wage earner. In fact, most households, many households, their key source of income is a SARB grant, but let's park that aside. You know, suddenly that person earning 15,000 Rand, well, they can employ someone to be a housekeeper and it just ripples through the economy. It's painful. And I remember we're going back to the 90s now when the tripartite alliance was still strong. And I remember that union communists in the ANC. And I remember saying to Vavi, Zwelithini Vavi, I remember offering to debate him. Fortunately, he said no because he would have whipped my ass. But I wanted to debate him. And I said to him, you've got to get out of this tripartite alliance because Labour needs to stand on the other side from business. And to be clear, ANC is business. And my argument behind that was the cadres coming back, BEE, Labour needed to be on the other side of the equation. And essentially, COSATU, which is now a shadow of itself, got consumed by capital.
Let's stick with that for a second. And only because the numbers just look interesting, right? You bring up the side of the politicians and government and all of that. If we are to compare an average factory worker in South Africa earning, say, 7,500 Rand a month, and you take that figure and you compare it with the average pay at a ministerial level within government, which is currently sitting around 224,000 Rand per month. Now, for context, we had said that Remgro being the best was 258,000 per annum, not per month.
And we thought that was a good number.
So, right, you thought that was a good number.
Consider myself schooled.
So, ministerial level pay on average, 225,000 Rand per month. Now, obviously, this would vary depending on what level of minister you are and all sorts of other factors there. But in simple terms, basic mathematics, the 7,000 versus the 225 odd thousand. It means that for every 1 Rand that a factory worker would earn in South Africa, a minister would earn nearly 30 Rand.
Yeah. Really?
Let that sink in for a minute.
Yeah.
because that in itself speaks to something else, in that the elected officials that are there to represent the factory worker
Are not.
in as much as we can debate whether or not a bank CEO earns close to 100 million rand, what that means, what that doesn't mean, that bank CEO is tasked with hitting certain targets. And if he doesn't, he gets fired. If he doesn't, he doesn't get a bonus. Or she, sorry, let me not be exclusionary here. Mary Villagazi is out there, and she is leading FNB.
My favorite stat, can I go totally off topic? My favorite stat in the whole wide world.
Yes.
There are more FTSE 100 direct CEOs called Dave than there are women. Carry on.
Okay, completely off topic, but still relevant to the conversation.
But to the discrepancy between different sections of a population, and it might be gender. We're currently talking around income and by the flip side of income, poverty. So yeah.
So even if we look at the blue collar worker, when you say the factory worker doesn't earn 7,000 rand a month, he earns 17,000 rand a month. From the 17,000 rand a month, that 30 times more compared to the ministerial salaries kind of drops to 13 times more. So even if you were to double the salaries of factory workers, they would still be significantly, by a factor of 13 or more, out-earned by your average minister or ministerial pay in South Africa.
And then they get a car that's...
They get a car.
That's
they get
20
flights.
times what a...
They get accommodation in Pretoria, in Cape Town, whole list of other benefits. We've discussed this before. But the nexus of this conversation from a minimum wage perspective, and this is what we'd love to get your thoughts on, folks, is how do we adjust for it? If we were to increase minimum wage, do we set a minimum threshold amount and say, across the board, no matter what performance looks like, you will pay 15,000 rand to every single employed worker here. If your business cannot do that, your business does not need to be in existence, and we will then consolidate the businesses out there? Or do we look at things differently and try and solution for the fact that, one, we don't have enough employment in the country in and of itself, and that is another factor to consider there.
Well, how about the classic capitalists would tell you, well, the employment will look after itself because we're giving all these people so much money. I mean, that's what capitalism believes in, trickle-down. I mean, to be clear, trickle-down has been disproved more times than Reagan's played golf. But... you know, I mean, that, and it would be, if you doubled a ShopRite's minimum wage person's salary, they're not going to take that 100%, that extra money every month. They're going to spend it. Are they going to waste some of it? Hell yeah. But you know what I do where my salary comes? Sex, drugs, and rock and roll. I'm wasting my money. Why can't other people waste their money?
Why can other people not be allowed to waste their money? We're going to leave the conversation on that note. That's the deep dive. We're going to get into investor insights, and we're going to look at the latest acquisition by the South African Reserve Bank. And we wrap things up with investor insights. This week we are looking at something quite historic from the South African Reserve Bank. To my recollection, and Sai, you've been around longer than I have, do you remember a time where the Central Bank of South Africa has bought something? Other than, and I think the most recent thing I can think of is the African Bank restructure.
Well, they didn't buy it. They were kind of handed it.
Yeah, so this is the first time that I can think of that the central bank has made a move from an acquisition perspective. Now, folks, for those that haven't seen the news out there, BankServe, the company that brought us the PayShap facility that all the banks have been raving about.
Love it. I'll pay my poker debts. Although I won poker last week, so they pay me.
There we go. Do they pay you via PayShap as well?
Yeah.
There you go, right? Instant payments was brought into South Africa in a big way by PayShap. It had been around for a long time before then, but BankServe is the company behind that facility. They've rebranded. They now call themselves Pay Inc. But more interesting than the rebrand is the fact that the South African Reserve Bank has taken a 50% stake in that business in an effort to democratize payments, revolutionize the payment systems, integrate, innovate, whatever it is. It's a landmark acquisition. The central bank has never bought anything.
So not even gold. I mean, the central bank buys
Not
nothing.
even gold.
They buy nothing. So I have questions. Who did they buy it from? The banks owned it, I assume. The big banks.
I don't know.
This wasn't Kabila down the road he owned BankServe. This was surely the banks owned it.
I think BankServe was a private organization. I don't know.
Okay, I'm not sure either. How much did they pay and why did they buy it? I mean, what does this mean? So BankServe, apart from doing all of the and correct me when I'm incorrect, although weirdly I speak to BankServe people on my show often, but I never thought to myself, what does BankServe do? They do the payment wheels, right? In essence, for what used to be checks and is now credit cards and PayShap and all of those sort of things. Why did the SARB buy half?
Well, from the SARB's perspective, it was around improving integration, improving innovation, and ensuring that the payments and the financial ecosystem of South Africa is moving forward, right? So there's a lot that goes into the financial ecosystem. Fintechs, everything from payment processing to cross-border transactions to settlement transactions. All sorts of things happen beyond just what the bank processes or what commercial banks process. There are lots of fintech companies and things in between. And some of these solutions are embedded into the banking systems and into banks, and they speak to one another, but they don't belong to the banks. And so I suppose perhaps for the central bank, it's to then own a piece of this in such a way that they are able to leverage this into something bigger, into a more sustainable solution and those sorts of things. So they intend to take up the 50% of the share capital, and they intend to do this through a collaboration with the commercial banks. So it seems as though the commercial banks, by and large, would have some form of ownership there as well. Whether their ownerships would be increased, decreased, the SARB would be sitting with 50% by the end of it in whatever way, shape, or form. Now, that also speaks to something interesting around the fact that if you are the SARB and you are looking to protect the payments ecosystem in the country, you don't want a third-party private entity. If we're talking matters of national interest, perhaps that's the angle.
So they go back to SASwitch and et cetera, et cetera. So they control the payment rails of moving money from A to B. And I suppose it is, that's quite a critical piece of infrastructure, and hence maybe move it out.
Especially if you're looking at payments modernization. We're living in a digital world. We're living in a world where we're starting to have conversations around central bank digital currencies, around cryptocurrencies as a form of payment and currency and all sorts of things there. The SARB is set to issue their commentary around digital currencies like crypto. We are still awaiting that, and we'll give you an update on that as soon as we get it from the Reserve Bank. But I suppose this could be a way to say we don't want to be left behind. And if someone out there is a technology provider and their technology is already out there, why should we then spend time developing our own technology, whereas we can just buy the tech that is out there, bolt it on, own it, and own that leg of the ecosystem?
Yeah, you know who gets nailed in this? Well, everyone else who wants to be a fintech business,
yes, because now if I'm going to launch
MTN and Vodacom and Telkom and everyone else, I mean, you certainly can. There's nothing stopping you.
No.
But I look at PayShap and I'm like, MTN wants to be my fintech thing, and I'm like, but why? Why?
But the other, to your point, Si, around the fintech side of it is, if Jimson is to launch a fintech solution to then go into the market and provide the same services as a PayShap. It's just become infinitely harder to compete with something that is owned by the central bank of the country.
Yeah, 100. Yes. Yes, and you know what? And my response is tough. I get the pain if you're Jimson, but I'm going to make the argument that payments need to be completely, that they need to be robust, they need to work, and they need to be controlled. And you know what, I'm sure we can get on those rails, but there might be a bit of a gatekeeper who we have to pay or something. But I don't think that payments should be. I tried to start a business, this is 25 years ago, essentially it was M-Pesa, where you could pay with airtime. So when I need to pay you for the coffee, I transfer you whatever, $30 of airtime or something like that. And I'd looked into it, and it was perfectly legal. But when I spoke to people at higher ups at banks and SARBs and stuff, they were like, yeah, but we know where your kneecaps are.
And this is, so I think about a company that I've spoken to in the past that is doing something quite similar in the payment services platform range over WhatsApp. So WhatsApp is now becoming one of those platforms where you have a wallet of sorts, and I can send from my wallet to your wallet over WhatsApp. That's it. Happy days. You get the money. You can then go and withdraw it and all of that. Now, again, the rails that all of these payments run on, it's probably companies like BankServe and that. So that level of the infrastructure, the banks, the central bank will then have significant control and influence over, which could be made. There's an argument that could be made for the fact that if we are looking to remove ourselves from things like the grey list and we're looking to have better controls over anti-money laundering and all of those sorts of things, you want to have a tightly controlled payments infrastructure within the country. However, given that we've already had the conversation around how exclusionary the banking sector is as a sector, this doesn't bode well for providing more inclusion in that space, because now the commercial banks, we're not seeing a rapid growth in the number of commercial banks in South Africa. Yes, we don't need the 200 banks that they had in America, but to have a little more freedom from that perspective has other implications around lending and all of those sorts of things. Right now, if all of the banks in South Africa decide we're not going to be lending over the next 12 months, South Africans have no alternatives really other than loan sharks and other...
See, I'm sure that SARB, BankServe, Pay Inc., whoever it is, will give access to the rails within T's and C's, to be clear. Jimson wants to come and have access to those payment rails. There's going to have to be some.
That's it.
Some
if you're sitting as an
diligence.
infrastructure provider saying you guys can come bolt onto this, you can still run your solution as Jimson. We're not stopping you from implementing whatever your solution is, but it will run on these guide rails and on these guardrails. Then that could be a good thing, like you said, a controlled system that is verifiable, similar to how the SWIFT network operates, similar to how...
SASwitch and stuff, which started with 12 banks. I mean, SASwitch came in the 80s. There was a competing protocol from the post office, and I can't remember its name, not important. SASwitch was only a couple, and in fact, for a while, your ATMs would operate... Am I remembering this correct? You had to go to a SASwitch ATM. If it wasn't a SASwitch ATM, you couldn't draw your money. And then I suppose, unless you were in the non, and I don't know who that was. And then it just became, they all now just interconnected and the like. You'll have access, but that access might not be direct. It might be through intermediaries, etc.
Oh, I think you're referring to those banks where... those little ATMs that were in the middle of nowhere, where you'd be charged an obscene amount of money to withdraw your funds.
No, those were just because someone was making money.
Those were something else.
That was something else. Hold on, they'll have it here. So initially BankServe started with checks called the Automated Clearing Bureau. That's the early 70s. They did their first EFT debit order with magnetic tape in 81. Multinet, competing network established by SA Post Office, and eventually merged into SASwitch in 1987. So we've now got the sort of the one payment rails for the ATMs. Flip side, of course, when it goes down, so are our ATMs. But I don't think that individual bank ATMs have. PaySwap, the SASwitch hasn't.
Okay.
Yeah. SARB had regulatory oversight of it, of course. I suppose they were just saying we want more control, just regulatory
control.
oversight.
We want to be able to see how the tech is being used.
Anything as to who owns
BankServe. Yeah. So from an ownership perspective, if I'm the SARB and I'm looking to regulate payments and financial services in the country,
I found it.
Ooh, what was the ownership like before this?
Hold on, you carry on talking a minute.
Okay, so whilst I looks for that confirmation, yes.
So, and this is prior. So First Rand 23%, Nedbank 23.125. Okay, so Standard Bank, First Rand, Absa, and Nedbank all own 23.125, and then Dandy Shelf 13, and I am not kidding you here. My bad. Dandy Shelf 3 Pty Limited held 7.5%. Who the heck is Dandy Shelf?
That could be an entirely private entity that developed the tech and then sold it into the banks.
Yeah.
So the banks are effectively reducing each of their stakes. I imagine the only way this makes sense is for each of the banks to take an equal haircut on their ownership and until the SARB has
It also
50%.
shouldn't be making much profit. I mean, that probably, it should almost, in an ideal world, be a PBO.
It should be, but we know that the banks are going to charge us their fee and as a processing fee as well that goes through to the Pay Inc. side of things as well. So very interesting how that
so
will
Dandy
then work
Shelf is all the smaller banks: Capitec, Growbank,
Okay.
Ubank, Citigroup, Investec, Bidvest, Mercantile, Susfin.
They've got a joint venture that
7.5.
they've got, I guess. That
Well, half
owns
those banks don't exist anymore. Ubank's gone. Growbank, I think, is gone.
Growbank.
Mercantile is now owned by Capitec.
Capitec, yes.
Sasfin, what did Sasfin do
Sasfin
with
is
their
now
bank?
delisting.
No, but they sold the
and They
bank.
sold their book to.
African Bank? No, they sold
Might have
something
been
else
to someone.
African Bank.
Someone, yes. So,
And
yeah.
Bidvest Bank.
Bidvest is gone.
Yeah,
Bidvest Bank has been sold now as well.
I think also to African Bank.
I think African Bank bought out their loan book as well. So, nevertheless, interesting developments from a banking perspective. Whether or not it creates more access, creates more exclusion, we will have to debate this at another time because I'd like us to get into our stock pick of the week. Something else that's a bank in some ways, but not necessarily a bank. Starbucks.
Ha!
The coffee guys, right?
Starbucks.
And the reason I compare them to a bank is because if you look at the way Starbucks' loyalty program is structured, you can effectively load money onto a Starbucks account to use later. It's a bank. It's a bank. But they come up as a stock pick because for the last kind of 3 or 4 financial years, and I saw this very interestingly when I looked at the Starbucks chart, and there was some social media commentary around it as well. We are about to enter what Starbucks fanatics call pumpkin spice latte season. Anyone out there that has a significant other, a family member, or anyone that loves Halloween knows that pumpkin spice latte season is a lot of money for Starbucks. They come up with the same pumpkin spice latte that they have for many, many years, but it sends sales through the roof. And in so doing, it also sends the share price up. If you look at the last 3 pumpkin spice latte seasons, the share price has started around about where it is here, has gone from about 75, 85 odd dollars a share, back up towards the $100 share level, come back down for the next pumpkin spice latte season. And it's done this so often that one has to wonder whether or not there is methods
crazy.
to it, right? It doesn't.
This is crazy.
Look at the timings. It's all in
No, it's-
September, October, right? You start to see the pickup in sales.
Yeah, no, I mean, you're not wrong. It's just crazy. I mean, we can go, I mean, this is just crazy. So for the record, I have a problem with Halloween because it's the day after my birthday and it gets in the way of my birthday parties. 2, I have a problem with pumpkin spice latte in and of itself. Pumpkin pie, my wife makes a pumpkin pie. Use a Queensland blue, it's to die for. But this is crazy stuff, man. This is totally...
It's
I mean,
consumer driven.
Even I'm going back to 2016. There it is.
It's consumer driven, right? So pumpkin spice.
2017. There it is.
There it is. 2018.
No, but I'll tell you when it's not there. You carry on.
So pumpkin spice latte season is coming up, which means that this is a potentially interesting opportunity.
Even in 2020, how were they ordering
Even in the
coffee? It
pandemic.
was lockdown.
So the stock at the moment is trading at a weird level where it looks attractive for a buy. It looks attractive for kind of a short-term trade into the end of pumpkin spice latte season, or even until December. I don't know how long this season goes for, whatever it is. Not financial advice, folks, just something we noticed on the chart. First time that you're seeing a company and a stock price being largely driven by something that's not related. I suppose it's related to the numbers in some respects. We can argue that it's performance related, it's increase in revenues, increase in demand, those
But does no
sorts
one
of things.
realize this happens every year?
I don't know. We didn't realize
Okay,
it.
to be clear, I did not. Okay,
See?
fair enough.
So
fair
we
enough.
didn't realize it. So maybe other people didn't see it. Hey guys, we've just found pumpkin spice latte season. So maybe that's going to be the thing. But for our wall, I think we will like it from a short-term basis. I don't know if it's worth liking on a long-term basis. Perhaps we look into the banking side of Starbucks, look into what else they've got going on. But for now, simply on the basis that pumpkin spice latte season is around the corner, we're going to add this to our wall. Not because it's financial advice, not because we're saying go and buy it, just something we found interesting, right? That's where we're going to leave that. Before we go, we're going to give you an unfiltered opinion of the week. This week's unfiltered opinion is around gift cards. We are entering a season where gifting will start to increase. Sai's birthday is coming around. Gifting is going to increase. So if you want to send the gifts, we'll leave the address. So you can send the gifts to him there. My birthday is early next year, so don't worry about that for now. Let's get through this one first. But gift cards. I received a gift card last week. It was a very thoughtful gesture. It was a very simple gesture. It wasn't anything that I had expected. It wasn't anything that I'd planned for. It just happened to arrive. And it got me thinking around gift cards. What is an appropriate gift, right? From a gift card perspective. Because gift cards seemingly, I've found, they are easier than gifting somebody something that they might not like. So a gift card is, here, go buy yourself the thing that you want to buy anyway. Let me not restrict you, right? And we're seeing them come up more and more in things like wedding registries as well, and birthdays and all of those things. Just give me the money and I'll go and spend it accordingly. What is an appropriate amount? Is it dependent on the relationship? Mm-hmm. Is it dependent on the occasion? Mm-hmm. Is it dependent on the financial circumstances of the gifter, the giftee, the person receiving the gift? Do you gift someone more because you know they like more expensive things?
Oh, no.
Do you put yourself out of pocket for that?
No.
What is gift carding, or what is gifting in this day and age, and what is an appropriate amount for a gift card?
I don't know, because I don't buy gift cards because of just that thing. I can buy you a bottle of wine that looks really, really fancy but costs almost nothing. But if I gave you a 30 Rand gift card, you're going to be like, oi.
Okay. So
I agreed with all the earlier points. I did not agree with because they spend a lot or because you don't have it must be relevant to what you have, to the occasion, to the person. If you're not a good friend, that gift card's like a $10 Starbucks. It's going to take you.
Even then, perhaps not gift them at all. Just send them a happy birthday message or whatever it is.
I'm that oak. I just ghost you. Like.
Okay, so folks, if you get ghosted out there, know that it's because you were a bad friend, not because Simon doesn't enjoy gifting. He does gift if he is your friend. But that is the unfiltered opinion of the week. What is an appropriate amount from a gifting purpose or from a gifting perspective? And is there an amount as a gift card, if you were to receive it, you would rather not? If somebody says, here's a 50 Rand gift card, you'd rather just say, just keep it. That's the show, folks. Remember, investing isn't hard. Let's try it.